What invisible threads bind the glittering allure of gold to the shadowed uncertainties of a world teetering on the edge of economic flux? As the calendar turns to November 21, 2025, the precious metals market stands as a mirror to our collective anxieties and aspirations, a realm where ancient symbols of wealth collide with the cold calculus of geopolitics, inflation, and innovation. In this essay, we delve into the top headlines shaping this sector, not merely to report prices and policies, but to ponder, in an era of fiat fragility, do these metals truly offer sanctuary, or are they harbingers of deeper fractures in the global order? Consider gold, that timeless sentinel of value, which has ascended to mythic heights this year, its price cresting above $4,000 per ounce in a rally that defies gravity. Just days ago, on November 19, it traded at $4,131, a 25% surge since January, propelled by relentless central bank purchases and whispers of stagflation haunting the West. Yet as dawn breaks on this crisp autumn Friday, gold dips to $4,043.61, a 0.82% retreat from yesterday's close, as hawkish murmurs from the Federal Reserve dampen hopes for imminent rate cuts. Why this stutter-step ascent? JP Morgan analysts forecast an average of $3,675 by year's end, climbing toward $4,000 by mid-2026, buoyed by central banks' voracious appetite, averaging 710 tons quarterly as they fortify reserves against U.S. policy risks and debasement fears. But pause here. If gold's shine reflects safe haven flight from geopolitical tempests, from Middle East flares to U.S.-China frictions, does its recent volatility not reveal a market less immune to the dollar's whims than we once believed? Investors, eyeing this dance, might ask themselves, is this a peak to sell or a pause before the next parabolic leap? Silver, ever the industrious sibling, mirrors gold's resilience while carving its own audacious path, surging 68% year-to-date to close October at a historic $48.69 per ounce, its strongest performance since 1979. On November 21, it hovers at $49.61, a modest 0.97% dip, yet analysts at Investing Haven hail it as November's breakout star, fueled by unyielding industrial demand in solar panels, electronics, and EVs. What alchemy turns this poor man's gold into a juggernaut? A squeeze in physical supply, exacerbated by mining lags and ETF inflows, has squeezed shorts into submission, while China's aluminum boom, up 2.1% year-over-year, signals broader metallic hunger in Asia. Yet for all its luster, silver's dual role as both monetary hedge and factory feedstock invites a probing question. In a world accelerating toward green energy, will industrial veracity outpace investment fervor, or will it forge silver into the decade's unforeseen king? The platinum group metals, PGMs, platinum and palladium, present a more labyrinthine tale, one of divergence amid the sector's broader ascent. Platinum, trading at $1,517 on November 21, up a tentative 3, edges toward contrarian appeal, with forecasts pinning modest 2025 gains on hydrogen fuel cell booms and South African supply bottlenecks. The London Metal Exchange's mid-2026 halt on PGM benchmark auctions adds intrigue, forcing a pivot to new pricing paradigms that could ripple through auto catalysts and jewelry. Palladium, however, languishes at $1,360, down 2, battered by EV substitution and Russian sanctions shadow, its October peak of $1,655 now a distant memory. This schism prompts reflection. As electric dreams eclipse diesel engines, do PGMs herald the twilight of internal combustion, or will hydrogen's promise redeem platinum while palladium fades into obsolescence? Beyond the ticker tape, legislative winds stir the pot. On November 19, a U.S. senator unveiled comprehensive gold audit legislation, a clarion call to pierce the veil of Fort Knox's opacity amid soaring national debt, now a black hole exceeding $38 trillion. Echoing this, Canada's Saskatoon rare earth hub challenges China's dominance, potentially reshaping PGM supply chains for EVs and beyond. And in Morocco, Aya Gold and Silver unlocks value from legacy stockpiles, blending remediation with revenue in a nod to sustainable mining's rise. These moves invite us to wonder, in auditing our metallic reserves, are we merely counting coins or confronting the fragility of trust in an age of endless borrowing? As November 2025 wanes, the precious metals world gleams with paradox, gold and silver as bulwarks against chaos, PGMs as canaries in the industrial coal mine. Year to date, the sector's rally underscores a debasement trade broadening across assets, yet Fed hawkishness and dollar strength temper the euphoria. For the novice collector or seasoned trader, the lesson endures. These elements, forged in stellar crucibles, remind us that value is not static, but forged in the forge of fear and foresight. What then will December whisper to the markets, retrenchment or renaissance? The charts may fluctuate, but the human hunger for enduring worth persists, a quiet rebellion against the ephemeral. In this glittering arena, perhaps the true headline is not the price, but the perennial question it poses: when all else erodes, what remains untarnished? Please like and subscribe, and I'll catch you on the next one.